Hello and welcome. You have tuned into Closing Trades right here on ET Now, and a fantastic move on the benchmark indices continue because Nifty 50 is now at the day's highest point with 130 points of gain. But look at the move in Nifty Bank as well, because in the last 30 minutes or so, that index has definitely caught on the fire. It's almost a 400 points of gain is what we are getting to see. Of course, backed by a whole host of banking names, but leading the pack is actually HDFC Bank. The heavyweight is also seen to be lending support in today's trading session. But one of the index that is seen to be taking a U-turn is actually India VIX, because at the start of the day, India VIX was actually trading in the green, but now slipped into the red, definitely giving that charge to all the bears. But autos, they have seen to be shifting their gears all throughout post 15th August announcement, but the excitement on the Wall Street continues. Take a look at Bajaj Auto, M&M, Eicher, Tata Motors, Maruti Suzuki, Hero MotoCorp. The list is long, and these are indeed the top gainers on the Nifty 50 side. On the flip side, it's the IT pack that is reeling a bit under pressure. Select consumer counters, select life insurance companies, but nothing to complain much given the fact that the benchmark indices are not just holding very comfortably, but along with that, it's the broader markets too that are seen to be participating. But the question remains, what your strategy be like and which are the sectors that you can bet on? Let's try to find an answer to that in the next 1 hour with a whole host of experts joining us. Let me welcome Pankaj Pandey on the show, who is the head of research at ICICIdirect.com, as well as Kunal Bothra is also with us in the studios. A very good afternoon, gentlemen, and thank you so much for your time. And Kunal, firstly, let me have a quick take by you on the benchmark indices. Both the benchmarks are at the day's highest point. What are you making out of it, and how should we see the next 1 hour to pan out?
Yeah, good afternoon, Srishti. And I think it's been a different day altogether with respect to the last so many days where the markets had seen heightened bit of volatility. I think there is hardly any major kind of a volatility which we've seen for the markets today on an intraday basis. I think that comes as a good comfort for the markets, because this indicates that this move could be more sustainable for the indices. In the morning, we were discussing 24,800 for the Nifty being breached. Now we are coming very close to 24,900 mark for the Nifty futures. The premium has increased up higher from 885 points right at the start to now 95 to 100 odd points for the index futures. Bank Nifty in the last 2 days has made a very good comeback. So may not be in terms of the percentage gains, but I think when you look at this from the Friday lows of 53s, 800, 750 thereabouts, I think it's been a good recovery of almost 600 to 700 plus points for the Bank Nifty. So all in all, I think it's a very good mixture. Strong stocks, strong sectoral moves, which you're seeing for sectors like auto. You've seen metal stocks showing signs of a breakout, and I think this should aid the move as well as the confidence in the market, which is very much needed at this point of time. So I think all of these are extremely positive signals. Lack of volatility, the market subsiding, the markets now moving up higher, moving up on the basis of higher resistances and breaking out of those levels. I think all in all, we should be looking at much more stronger up move for the remainder of this week.
Right, much more stronger move expected for the remainder of the week, as well as the markets are comfortably trading above that 24,800 mark, at least for now. But Pankaj, let me have your take on the star sector, not just today, which has been the case for the last 15 days or so, and that is the auto pack. But Pankaj, given the up move in some of these OEMs, seems like the whole cycle is getting to see a different sort of a shift. Yes, of course, there's optimism around the sales post 22nd of September. But Pankaj, do you believe now is the case where one can avoid the OEMs for a fresh trade and maybe nibble into some of these auto ancillary names? Because today, I guess I read a report on Exide Industries in particular.
Hi, good afternoon. Thanks for having me. I think overall, this GST-led price revision, our sense is that has the potential to lift volumes by 8 to 10%. And across OEMs, we would expect companies to sort of benefit. I think except for the factor that as companies like Hyundai have already sort of rallied prior to that. Otherwise, we still see upsides in OEM. So Maruti, again, we have raised our target price to about 17,160. Mahindra and Mahindra, I think 4180. Ashok Leyland again to about 155. And not only the OEMs, our sense is that ancillaries will also benefit. We already highlighted Exide Industries. We have a buy there. I think even the tire companies like Apollo Tire should benefit. In addition to that, you have companies like, say, Sunset Engineering, steels to wheels, which supplies alloy wheels, that could sort of benefit. So we see this sector sort of doing very well, and this is probably not the peak we are sort of expecting. I think this sector was already struggling with mid-single digit kind of a volume growth. And this GST rate cut again will sort of sharpen the overall consumption basket. And because discretionary wise, auto is expected to be one of the biggest beneficiaries. So we still see upside in OEMs as well as ancillaries, even at current levels. But yes, some of them have played out, but our sense is that we still need to see how the demand sort of sustains, say, December quarter onwards, because I think you have furthermore benefit in terms of eighth pay commission sort of kicking in. So you still have a number of triggers for this sector to sort of do well. So I think the rally is still not over yet in autos.
Right, the rally is not yet over when it comes to the auto space. And yes, of course, from the auto OEMs to ancillary, a lot of these counters are buzzing. And yes, Exide Industries was one of the stocks that Pankaj, as a research firm, does like. And the stock was also holding on to the gains of more than 3% the last time I checked. But along with that, a very interesting development coming in on HCL Tech as well, wherein Amitabh Kant has been appointed as one of the key members in the board for HCL Tech. Yes, of course, that particular counter is not doing that great, but the company has appointed Amitabh Kant as additional director for the next 5 years with effect from 8th of September. So that's the news flow that we are tracking. But along with that, it's not just the autos that is having a good day, but it's the metal pack as well. And Kunal, I have to come to you because in the morning when we were discussing about your sector outlook, it was only the metal pack that you were flagging off that could do well. And we have already seen that happening. But any other stock within the metal pack that is still looking attractive to you?
Yeah, it started off with Tata Steel, showing signs of a good gap up, closer to that 170 to 174, which was the target range which I had highlighted in the morning. And I think post that, we've actually seen JSW Steel also looking quite strong. So, we talk of the 3 or 4, key names from the metal pack. Tata Steel, of course, ranks to be number 1, then followed by JSW Steel, JSPL, as well as Hindalco. These are the top 4 names which apparently have been doing reasonably well. And I think in this leg of up move also, I would believe that the momentum should come back into these stocks going forward. What we are also seeing is a very good volume as well as an indicator-led breakout for many of these names. And I think that should aid the move further for these metal counters. In the previous past also, we've seen many false starts for many of these metal counters. But apparently, with lack of volumes, no major push from the indicators, we've seen that the momentum had subsided previously. But this time around, I see a definite change which is happening for the metal pack, and I think that's why I would believe traders could look at a buy. Yes, the beta of these sectors is pretty much on the higher side, so you may expect a slight bit of higher volatility for these stocks as compared to maybe a natural kind of a sector which could be low to moderate beta. But then I think for traders who have a slight high risk appetite, I would still believe that likes of Tata Steel, JSW Steel, even the likes of SAIL as well as Jindal Steel, I think they could look very attractive from current levels.
Okay, so Kunal's absolute conviction on the metal pack, and if you're an aggressive market participant, then stocks like Jindal Steel, Tata Steel are the ones which you should keep an eye on. The stocks are performing in the metal sector and all is shining in trade today. But then we caught up with an exclusive conversation with Naveen Jindal, Chairman JSPL, touching upon various topics from the likes of the latest GST rate rationalization to anti-dumping duty. Let's go across and listen to that excerpt.
This whole GST 2.0, I believe, is revolutionary, not only for steel industry, but I would say every industry, and it puts more money in the hands of consumers, our citizens. So steel is going to be positively impacted because cement where GST was 28% has been brought down to 18%. And there is no amount of cement that you can use. You cannot use cement without steel, because every building, the nerves of the building are really steel. That is what gives strength to the building. So it's going to help in that regard. And then our customers, say automakers, many categories of cars are going to attract lower GST. All the electric cars are going to attract lower GST. So that also will help boost demand for steel.
DGTR has made a recommendation for 3-year
Yes,
safeguard duty in a staggered manner. Do you find it sufficient to meet current dumping challenges?
Yes, we feel we had requested, we had demanded 25% safeguard duty to be there, but they considered that okay, it's better to have 12, 11.5, and 11%. So that's okay. So along with that, Indian steel industry is a very competitive industry, is a very efficient industry. So we'll be able to work out with these numbers also.
Industry is also seeking more steps to bring down the overall input cost. So what possible measures that should the government take?
So basically, what we are wanting is that iron ore is a very important ingredient that goes into steel making, and availability of iron ore in India must improve further.
All right, that's the exclusive interaction with Naveen Jindal. But taking a look at the markets, they are turning to be very volatile right now because just at the start, we have seen good gains on Nifty as well as Nifty Bank. But in the last 5 minutes or so, the picture is seen to be changing for a bit. So we'll keep tracking what's happening on the benchmark indices. But for this, let me also welcome Ruchit Jain, Vice President, Equity Technical Research and Wealth Management, and Motilal Oswal joining us. Hi, Ruchit. Good afternoon and good to be speaking with you. And firstly, Ruchit, help us understand that how do you see one of the top losers today, Trent, on the charts? Because that's interesting to see that there's been a lot of excitement with respect to Trent, that how this whole consumption story will pan out, how post 22nd September these consumption related counters are expected to do well, including the retailers. But all in all, more than a 3% cut coming in on Trent, that's a little surprising. How do you see the technical setup of this one?
Yeah, hi, very good afternoon. Definitely a bit surprising, considering that recently we have seen an up move towards 5600 from the lows. But today's price action clearly breaks the important supports of 28-day and 50-day exponential moving average. And the RSI oscillator has also turned negative, which clearly indicates there is more of a selling momentum in the stock rather than any buying interest taking place at current juncture. On the lower side, major support would be the previous swing low, which is around 5200 kind of level. So believe that we could see some more selling pressure in the near term and stock could head lower towards 5200 in the short term.
Okay, so that's a view coming in on Trent. Surprising move towards the downside, 3.5%. Ruchit will also come for your trading ideas. But then another ET Now exclusive, in an exclusive chat with ET Now, Ujjivan Small Finance Bank's MD and CEO Sanjeev Nautiyal shares the details on the bank's plans on universal license and growth outlook. Let's understand that.
We have submitted our application for migrating to a universal bank, to Reserve Bank of India, in the month of February 2025. And the application is being considered and evaluated by Reserve Bank of India. It is now up to them to decide on the fate of our application. This can only be a conjecture.
Okay.
Maybe by December, some decision might be taken.
Okay. Sir, just want to understand about your loan growth. What are your loan growth you are targeting under your 5-year plan, and any capital raising plans also there in that 5-year journey?
So under our 5-year strategic plan up to 2030, we have chalked out a loan book growth of around reaching a level of 1 lakh crore. And we think if that plan were to happen, we would need around 2,000 crore of additional capital in the next 18 to 24 months.
Okay. So one more question I want to understand. What is the ratio of secured and unsecured book? And are you seeing any sort of pressure on your unsecured book?
So this is an area which Ujjivan has taken up with full sincerity. From a 70% unsecured portfolio as at March 2024, as I speak today, it is at only 54%. Okay. So the secured book has grown from 30% to 46%.
So do you think that still there's some sort of pressure is there on microfinance loans?
So this was an issue of over-leveraging that happened over a period of time. With the application and implementation of Guardrail 1 and 2, much of discipline has been restored. And I think the guardrails also brought in some difficulties, but they also settled various matters. And the second half of the financial year should be much better for most of the players, depending on the kind of the size of that organization and the phase in which they were. But second half normally should be better for the microfinance industry.
Right, so that was the chat with the Jeevan Small Finance Bank management. Let's watch out for that. But with this view, let's also tell you that protests erupted in Nepal's capital city, Kathmandu, demanding that the government lift its ban on social media platforms and end the culture of corruption pervading the country. Now, several social media sites, including Meta, YouTube and X, have been inaccessible in Nepal since Friday after the government blocked 26 unregistered platforms. The stir turned violent as protesters clashed with the police, prompting the Kathmandu district administration to impose a curfew in and around New Bhubaneswar area.
I think if you see this entire activity, that is going to generate a lot of consumer demands in the economy. I think retail loans, definitely it is going to pick up.
I think it's a wonderful move. I think it's also wrong to believe that in the long term there will be loss to revenue. There'll actually be a gain in revenue.
This will enable a lot more people to buy. The government is sending a message that these are very important products. That is why we have made GST on these products zero.
18% GST going down to zero has a huge difference.
And as an industry, I do feel we will step up to make sure that the full benefit of exemption is passed on.
It is always there when the downstream government will grow, whole value chain will grow.
And the apparel, which used to be 5 and 12, has moved from 5 to 18%, and the demand will go on for that as well.
Welcome back. You're watching Closing Trades on ET now from SBI Live Studio, and after a good run-up of the entire session at present, if you see, there's a slight dent on the indices at present where Nifty has witnessed a sudden fall of around 115 points and is ranging somewhere around 24,780. The Bank Nifty has also dipped around 300 points and is ranging somewhere around 54,518 levels. We should also take a look at the broader indices because the mid-cap and small-cap were doing real good during the session, and at present the small-cap is still trying to sustain the levels. However, it's a volatile session for mid-cap at present and small-cap also, but mid-cap at least in comparison to the benchmarks and the broader markets at least trying to perform. We have with us Surchit Jain, Kunal Bothra, and we also have our fundamental expert Pankaj Pandey. Pankaj, food delivery space and quick commerce space, both Swiggy and Zomato, Eternal, after the platform fee increase, which was the latest announcement from both of the players, we also had brokerage reports on both of it, and today in this session also, after a good run-up during the entire session at present, the gains a little bit have frizzled out. But then in comparison, there's always a comparison between the two. What's your take on the space, and which one of the stock is a better one according to you?
So within this new age companies, we don't have coverage on both of them. See, what we like from a new age company's perspective is the EMS space. I think that space looks particularly attractive to us. And the companies, what we like is again Dixon, you have Ember, you have Sirma. I think overall sense is that the consumer durable as a space will sort of find favor. In fact, even the AC-based players, while we sell somewhere about 1.25 crore kind of ACs, there's a good chunk of inventory which is there at the manufacturer level and also at the dealer level. Our sense is that because of GST rate cuts, it is very much possible that some of these inventories will get cleared up. Otherwise, the overall sense is that besides auto, consumer durable is another segment which can offer a lot of premiumization and is a beneficiary of the overall discretionary income. And so from that perspective, I think that space looks more attractive to us. And we see far more longevity in terms of growth and also better profitability.
Attractive space. I second the thought over there. And EMS is another category which one should eye. An entry opportunity, if at all you get, is a space which will give you real good returns in future. But then again, coming to the food delivery space, and Kunal, if any technical view on the same, both Citi and Nomura has come up with their brokerage reports on Swiggy and Eternal. For Swiggy in particular, 465 is the target which they anticipate, and also an upside target for Eternal.
Yeah, I think both these charts are doing very well. Eternal, of course, has a much more higher price history. So, and we've looked at the chart, and specifically a point where from 2021-22, when the stock was beaten down, went down to I think as much as 40 or 50 odd rupees, and from 50 rupees the stock had come down, come back to 300 plus mark. So I think it's settling back again at those 300, 320ish kind of levels where it's trading right now. Looks to be more of a stable chart from a medium to long term perspective. But Swiggy, I think, could also be another interesting name to watch out for. The stock has just about gone back into a recovery phase after, I think, 2 months of sideways price range, stuck at 400 mark, plus minus 5% range for the stock in the last couple of months. We've seen a breakout happening for Swiggy on the short-term charts. It's managed to come back towards, I think, a 5 or a 6 month swing high on the short-term basis. So maybe there could be a slight bit of higher momentum which could be assigned towards a chart like Swiggy. I would expect the stock to potentially come into that zone of 460 to 480 over the near term.
All right, so that's the take coming in on the quick commerce space. Let's watch out for that. But yes, a lot of these counters have been doing well of late, alongside what we have seen coming in on some of these other sectors like autos. But Pankaj, Asian Paints, that too is actually down almost 2% in trade right now. With respect to upcoming Diwali, there's been a lot of optimism that has already built in with respect to the consumption boost that could likely be in play. What are your thoughts on the paint sector right now, and any particular take on Asian Paints?
So I think volume, again, our senses has been sort of muted in the last few quarters, and there is obviously pressure on margins. While yes, there is a potential for volumes to sort of perk up a bit, but unlikely to sort of justify the kind of valuations of what one would expect. So I would still want to believe that the stock on a relative basis will continue to sort of underperform, while price-wise largely damage has been done. So it might do more of a time sort of a correction. I think one needs to be very selective on the overall consumption basket, because our sense is that with the GST cut, a potential price gap between unbranded and branded player will sort of come down. So a lot of food consumption categories, I think, can sort of benefit from that aspect, and that is the space we would prefer. So I think Tata Consumer, you have companies like Marico, I think those will sort of tend to sort of benefit more. And I think Asian Paints, given the fact that price-wise, there could still be challenges, and margins are expected to remain capped. So I don't see much of an upside in Asian Paints at current levels. So you have definitely more stocks in the entire universe.
Pankaj, thank you so much for giving your time, your views and strategy on the market. It was nice connecting with you. Thanks a lot and have a nice day. Moving ahead at present, yes, the markets are volatile, but it is the automobile sector which is the outperformer. And if you see the larger contributors, the first 5 of the stocks will be the scripts from the automobile pack itself. M&M, Maruti, Tata Motors, Bajaj Auto, a few stocks which are doing really good, and the major contributors in the markets. But then let's talk about the trading ideas. And Ruchit, what will be your trading ideas for the day?
A couple of recommendations on the long side that technically are looking much positive. First is a buy recommendation in AB Capital. We have seen that since last 2 months, the stock has seen a gradual up move. And even when the broader markets were showing a corrective phase, we did not see any kind of price-wise correction in AB Capital. So it has been a relative outperformer during the corrective phase as well. And now this high top, high bottom structure is getting continued. So this clearly indicates a continuation of the uptrend in the stock. So Aditya Birla Capital can be bought with stop loss below 280 for potential near-term targets around 315. And as you are speaking about the auto names, I think one auto stock which has been a huge underperformer within the auto basket was Tata Motors. And the kind of price action that this stock has shown in last couple of trading sessions, it seems that we should see a cover-up move for this underperformance in the near term. Now, after about 11 months of time frame, today is the first day when the stock is attempting to give a breakout above its 200-day EMA. which was broken during last year. So I think these are some signs of a probable pullback move in Tata Motors. So we are recommending to go long on Tata Motors as well, with stop loss below 697 for potential short-term targets around 760.
Those are the calls coming in from Ruchit. But Kunal, what about you? Which are your stock trading ideas?
So I'll also go with Tata Motors. I think it's an interesting chart. The stock had been a huge underperformer. It's making an inverted head and shoulder pattern. The stock has confirmed a breakout above those patterns of 705, 706 as a breakout today when the stock has crossed those levels. So we'll look out for targets in the near term, 750. Stop loss could be kept at 700. And the second would be about L&T Finance. It's been a classical chart. The stock has been more of a consistent price mover on the upside. It's broken past above a series of resistances around 220, then a cluster of resistances around the 230 kind of levels. So would expect higher targets for the stock in the near term. 242 as a immediate target for L&T Finance. Stop loss could be kept at 228.
Okay, so these are the trading ideas from both our technical experts. But then let's now talk about the IPO market. Shringar House of Mangal Sutra IPO is set to hit the D Street and opens from September 10 to September 12 with a price band of 155 to 165 per piece. My colleague Sajid caught up with the management to understand the usage of IPO proceeds and expansion plans. Take a look at the slice of this conversation.
मेरा एक्सपीरियंस मोर देन 40 इयर्स सिर्फ एक प्रोडक्ट के अंदर, और जब एक प्रोडक्ट के अंदर वो एक्सपीरियंस हो जाता है और वो डिज़ाइनिंग और वो जो इन्वेंट्री हम मेंटेन करते हैं स्टेट टू स्टेट चलने वाली, तो आज आप कह सकते हो कि इंडिया के अंदर जितने भी लीडिंग ऑर्गेनाइज्ड चेन स्टोर्स या रिटेल ज्वेलर्स जितने भी हैं उसमें एक नाम बनता है. इफ़ यू आर स्पेशलाइज्ड तो आप कहीं ना कहीं आपकी एक इमेज बनती है मार्केट के अंदर. तो इसी वजह से आज यू नेम द बिग कंपनी, दे वर्क विथ श्रृंगार एज मंगलसूत्र. आज मंगलसूत्र की अगर इंडस्ट्री में बात होती है तो इन B2B सेगमेंट श्रृंगार एक अपना मकाम रखता है.
Viraj, Shringar has three business categories, right? You have corporate, which is the B2B for you. Then you have retailers, and then you have the job work and others, right? Wholesalers, basically. Can you define how each of the segment is working for you and what kind of margins that you work on?
So today, Shringar has more than 1,200 customers, and like we spoke about the corporate sector. So Shringar is a strategic vendor partner for all the corporate houses, and the reach Shringar has in terms of retailers, so that spreads across 24 states and 4 union territories. So the corporates are already working with us, and the plans which corporates have to grow in the future. So Shringar would love to be a part of their journey and would love to grow hand in hand with them. And the retail stores, so there are today nearly 65% of the market is still in the hand of retailers, single store and unorganized sector. So today with this IPO coming up, we would like to expand in a big way in the unorganized sector also, tapping the tier 1, tier 2 cities, and also tie up with more and more wholesalers, so that we can penetrate even deeper into the market.
Give me a sense of when you say corporate, what does it mean for you? I mean, you're talking about chains like Malabar Gold and P.N. Gadgil, which are one of the key
So like
key
you rightly
customers.
said, Tanishq, Malabar Gold, PNG, Joy Lucas, Reliance. So we are a vendor partner for all these corporate companies.
And when you say retailers, it will be single store?
There are single stores, yes. Sir. There are several, like, single store has more than 60% of the market share.
And wholesalers would be?
So ultimately the selling point for the consumers are and wholesalers are the B2B chain in which we supply to the wholesalers, and we call them, particularly we call them facilitators. So these facilitators, they work for Shringar. We hand over a sample line to these facilitators who go to retailers in their surrounding and represent Shringar and do and fetch more orders and more sales for Shringar.
And what is the margin structure here? Because I was looking at your margins, it has gone up to nearly 6.5% in FY25, and it's gradually gone up from 4 to 6.5% in last 2 years. Where is this margin coming from?
So I would like to tell you that the mainly Shringar focuses on innovation. So every year we come up with a new category of Mangalsutra, a premium category in Mangalsutra, which we try to fetch more and more percentage of margin from those. So
All right, but taking a look at the markets, it's a complete U-turn is what both the benchmark indices have taken right now. But shifting focus to the insurance space then, as we have the August provisional general insurance data, how have the industry leaders and others players have flared in the month of August? Anurag is here with a roundup. Anurag.
So in month of August, as per the provisional figure, as per our sources, the general insurance industry has seen a degrowth of minus 15%. So month-on-month figure as compared to July 2025 to August 2025, Go Digit has seen a degrowth of minus 16%. ICICI Lombard has seen a degrowth of minus 12%. New India Assurance degrowth in premium in comparison to July in August is of minus 47%. Standalone health insurance company Niva Bupa has also seen a degrowth of minus 3.8%, and Star Health Insurance has seen a degrowth of minus 6%. So not a good month for general insurance industry. I will go through year-on-year number also. Also, there is a catch in year-on-year number that last year the long-term premium was allowed, but from 1st of October, the long-term premium is not allowed. So that is a catch. But in long-term year-on-year numbers, industry has grown up by 4.2% as compared to last year. ICICI Lombard has grown by 2%. New India Assurance has shown a growth of 9% as compared to last year, August 2024. Go Digit has shown a growth of 13.5% as compared to last year, August 2024. Similarly, Niva Bupa and Star Health has also shown a growth of 2%. Niva Bupa 2.74% and Star Health 1.85%. So not a good month for general insurance industry. The August provisional data is showing a degrowth in general insurance industry.
So concern in the general insurance industry, and that was a quick roundup, the August scorecard. Thanks for that update, Anurag. Ruchit, would like to come to you on the insurance space. A lot of news flows back since last few sessions on the insurance space also, which was doing giving momentum to the space altogether. But then the general insurance scorecard looks like a concern. What's your take on the insurance sector and any scripts if you would want to suggest over there?
Yeah, so clearly a relative underperformance can be seen in the stock since last 1 week. We have not seen any kind of price up moves which have been supported by good volumes, and stocks such as ICICI Lombard is there. We have seen the stock is on the verge of breaking its previous swing low supports as well. So I think in this kind of market where selective sectors of stocks are doing well and those stocks are not participating along with the broader markets move, it's better to avoid any kind of bottom fishing there, as that underperformance could continue for a while.
All right, so that's the take coming in on the insurance pack right now. But along with that, take a look at the markets. We have literally fizzled out all of the gains that we were just talking about at the start of the show. But autos continue to take that lead and the charge ahead. It's India VIX as well, which is seen to be taking a bit of a U-turn, because from the red zone, it's once again into the green, and maybe some concerns. There is what we are getting to understand from the broader market movement as well. But Trent, Asian Paints, Nestle, these are your top drags, and add to that list is select IT counters. And Kunal, we were just talking about the IT space at the start of the day, that why it is not garnering such of an investor interest right now. And yes, of course, there were some reports flagging off that tariff concern. But technically, do you believe that the IT can get more weaker?
Yeah, it should get more weaker. Buying may not come into the sector, and I think that with the lack of buying which happens into the space, recovery gets delayed for the stocks. So I think even though price-wise, the likes of TCS, Infosys, HCL Tech, TechM, etc., many of these large cap names, they would look very attractive. But with the lack of buying support, maybe because of the lack of positive news flow for the entire sector, or too much of negative news flow for the sector, I think traders generally wait out for the news to subside and the events to just about pan out before they start to take position into these names. So I would believe that with the lack of this kind of a positioning, many of these IT stocks could at least go into a drag, if not go into a further corrective mode.
wait for the IT sector to make a comeback. Then moving ahead, let's talk about another space, which is the fertilizer sector. Lower GST on fertilizer raw material will likely reduce the subsidy burden for the government, according to sources. Now, what are the sources telling? What does this mean? Prakash Priyadarshi is here with all the details of the same. Prakash?
The government sources are suggesting that the reduction in GST on fertilizer raw materials is likely to bring down the overall subsidy burden for the government, a very significant development coming in. In fact, the anticipated higher subsidy outgo may ease amid high raw material prices in the international market that have increased by more than 14% in 2025 compared to 2024 levels. Along with that, the sources are also indicating that the reduction in GST may help the government in early elimination of urea imports that will lead to subsidy savings for the government. You are aware that the GST Council has reduced GST on various raw material to 5% from existing 18%, and therefore FY26 urea and NPK category fertilizer subsidy expected to remain within budgetary announcement, which is set at rupees 1.67 lakh crore for the financial year 2026. Sources also tell us that the Fertilizer Ministry has reviewed the current price trend scenario in the international market and likely to hold another round of meetings with the industry to assess the current situation. And in fact, the government is open to providing additional financial support to the industry to offset increased cost in order to ensure sufficient availability of fertilizer in the domestic market.
All right, thank you so much, Prakash, for getting us all the latest news flow with respect to fertilizer as a space and how the subsidy allotment will get impacted. But Ruchit, any particular take on the fertilizer space, or rather some of these agrochemicals plays as well? Because of late they have been showing some bit of a momentum along with the market. But any particular stock within the pack that still look good to you?
I think we have seen some kind of up move, but the follow-up move is still missing within many of the fertilizer names. So we would advise to keep a wait and watch approach, and until we see price up move supported by good volumes, I think these are just range bound moves within the fertilizer basket. But within the entire agrochem space, if we see, then UPL is one stock which technically is looking positive. The stock has been forming a high top, high bottom structure on the daily as the weekly chart. And recently, we also have seen some dip from 740 to 680, 690, which is a good support for the stock. So this correction provides a good entry point for positional traders who want to create fresh long positions within the agrochem space. So UPL, I think, is one stock which technically looks poised for a resumption of the uptrend, and post the recent dip, the risk reward ratio is done favorable to take fresh long positions over here.
UPL is a stock which can see further upside, 2.5% upsurge at present as we speak. But then another space and another stock in inorganic chemical space, Aarti Industries. Kunal, need your technical understanding on this. 3.5% upsurge as we speak, Aarti Industries. 388. Do you see an upsurge in the technicals at present, and what does the chart suggest here?
Well, I'll probably wait and watch for Aarti Industries, because the chart has been beaten down significantly in two major time frames. I remember, I think the stock was almost at 750 levels there about in 2024, when there was a sharp correction from the stock price. It had fallen down to almost 380-400 levels, and then the recent sell-off which happened for Aarti Industries was from the 450-500 mark. And again, the stock in this case corrected by more than 30%. So twice in the last 1 year, the stock has seen almost like a 30% cut in a very short span of time. That should keep the stock prices a lot more volatile. In the other, in fact, from the chemical space, the other chart which is actually looking very much attractive is SRF. That's a stock which I think seems to have bottomed out, at least over the near to medium term charts. It's been consolidating above the 200 DMA for the last 3 to 4 weeks. And the stock has formed a triple bottom support just below that 2900 mark on the spot levels. So I think at current levels, if I have to take a bet on the specialty chemical space rather than Aarti Industries, I'll definitely go with SRF.
And if at all you have a position in Aarti Industries, keep it intact. But for new positions, stay away, is the take coming from Kunal Bothra. But it's raining price cuts in the auto market ahead of Navratri. Tata Motors has slashed prices across its car and SUVs range by up to 1,55,000 effective September 22nd, when the new GST slabs take effect. We caught up with experts to decode the same. Listen in to what they had to say.
I really appreciate some companies who have actually come forward and who are trying to share the burden with the dealers. I think it's a great way to go, but not every company has come forward, which means that the dealers need to bear the brunt of this compensation cess, which I think is extremely unfair. We've been talking about 21 days inventory in FADA for the last more than a year. And manufacturers have been dumping vehicles on us, which have gone to 55 days, in certain cases up to 3 months. So we are not the ones who ask for the stock. The manufacturers have put the stock on us. So the onus also is on them to take the burden, the majority of the burden on this, or the stock and the cess available therefore, and help the dealers out.
So there are some OEMs, but very rare, who are coming forward and giving customers the benefit of GST cut even today, which is 14, 15 days before, so that if they have interested, they can buy that and it will help us reduce the inventory with us. It's a turnover game, not a per vehicle margin. We work at a very low, thin margin percentage. So covering 10% for any of us is difficult. So it's a joint effort where we are trying to insulate ourselves with this. Cess is a mess thing, but let's hope that things change with the government coming up in 2-3 days or 4 days of our follow-up on this.
So GST rate rationalization, an absolute booster for the automobile sector and the industry. Veterans talking on the same. Rujit, a quick view on the travel, tourism and leisure space, and I'm not specifically pointing it out, but TBO Tech is the stock which did really good in last 2 to 3 trading sessions, of course on the back of the brokerage reports, positive one which came today for Jeffries, and also another acquisition news which came where the company did acquire US-based Classic Vacations. Any take? Do you track the charts?
Yeah, so we have seen improving volumes over last few days, and no significant gap up opening was seen even 2-3 days ago, where 1450, which was the earlier resistance, was broken out. So I think now this 1450, 1500 range would become a support on any kind of declines, and hence the price-wise downside seems to be very limited from here on. So if one is looking for buying the stock for positional basis, and then one can keep a buy on dip strategy, and any dips to in the range of 1500 to 1450 could be used as a buying opportunity. Also within the entire space of travel, I think Yatra Online is another stock which technically we are quite bullish on. Post the recent quarterly numbers, the stock witnessed price up move supported by very good volume. So certainly good buying interest was seen. And after some consolidation, there are some indications of the continuation of the uptrend. So Yatra is one stock which, if one is looking for buying from a positional perspective, then one can look to enter even at current levels.
Right, so that's a view coming in. We are moving towards the closing of the market, but Kunal, just a quick view from you on PCBL, Philip Carbon Black Limited. The auto sector is performing, the ancillaries are doing well, but this one is the ancillary of the ancillary. Phillips Carbon, what's your view?
Yeah, it's been a chart which has been frankly all over the place in the last, I think, 3-6 months. From 440 as a high to 350 as a low. The stock has tested this levels 3 or 4 times in the last 6 months. So maybe I think keeping 350 as a support, traders could look at a contra buy, expecting the momentum could come back into the stock price. And anytime I think we see a breakout close to the 395 mark on the spot levels, we may expect the upside to come back pretty fast for PCBL. So 350 as a stop loss for this trade.
All right, let's move towards the closing of the market, and Shrishti is standing by with the closing levels for the market. Shrishti, over to you.
Well, we are getting you the closing of the